Whenever you're ready, bro.
This is Crypto Venta, this is Crypto Venta, this is Crypto Venta. Crypto Venta for you, this is Crypto Venta, this is Crypto Venta, this is Crypto Venta. Crypto Venta for you, smash those likes. Smash those likes. Crypto Venta for you, smash those likes. Smash those likes. Crypto Venta for you, smash those likes. Smash those likes. Crypto Venta for you, for you, for you.
Welcome back, guys. Welcome back to a down market, red bubbles everywhere. What a way to end the week. And this time again, because of Binance Fud, and the latest Fud around Binance came from none other than Walter Bloomberg again. He says Hong Kong's SFC says no entity in the Binance group is licensed or registered to conduct regulated activity in Hong Kong. So it does look like Binance is under attack. The big question is, if Binance is under attack by regulators, and if the regulators do catch Binance, which is the biggest exchange in the whole world, custodying more assets than any other exchange in the world, is this a market threat? Can it collapse the whole market? And should we be paying attention to Binance, worrying about our money on Binance, and worrying about whether Binance could go down and take the whole market down with it? That's the big question. Or is this just FUD? More FUD. Welcome back, guys. I'm Crypto Man Run. I'm here every single day, at least twice a day. 10 a.m. EST for the show, 6 a.m. for a charting show. What's up, buddy? What's up? We're also starting a few new shows. We're also starting a show next week. The show next week. Freddie, can I give it away? Nah, I'm going to give it away. Come on. Now, Freddie, don't ruin the party. Okay, he said it's a small teaser. So the small teaser is that next week we're starting a show called Get in the Game. And what that show is about is getting in-game NFTs. And we're going to actually start a show showing you which NFTs you should be buying, which games you should be looking at, which games are going up in value. So just more and more ways to make money through NFTs in crypto. Also, we're starting the third show next week. That's the fourth show next week, which is another surprise. And eventually, we will bring you 24/7, 365 streaming crypto content. That's the goal right here. So, if you're new to our channel, welcome. I'm Crypto Man Run. My partner is Sheldon. My producer is Freddie. We're here every single day. Like this video so we can get it out to the entire interweb, because YouTube is gatekeeping crypto content. And much worse than that, now in the bear market, YouTube's kind of like going, look, people aren't interested in crypto, so we're not going to promote crypto content. So double whammy. So what we need you guys to do is to smash the like. That's it. That's all you need to do. We'll make free content every single day, at least 2 shows a day. You need to do one basic, simple thing. Smash the like button, share this, subscribe. Another reason to subscribe, we have now said that we are selecting the first 100 people into Crypto School. Crypto School is now launching on the 1st of August. We've confirmed that. If you want your seat in Crypto School, you've got to be a subscriber to our YouTube. It is a big commitment on your side. It is, the first module is about 20 hours of school. That's the first module. That's an introduction to crypto. The second module is also about 15 hours. And you're going to be in school. You're going to be in class, a virtual class. You're going to be lectured by a whole lot of professors and people that know what they're talking about, hopefully. You're going to learn everything from what is a Bitcoin and the history of money to how to stake, how to invest, how to use a MetaMask, and all of those things. You're going to learn about NFTs. You're going to learn how to trading techniques. And you're going to do this with your peers in a classroom. And yeah, it's going to be fun. You're going to build a network. And then we're going to look after you, so to speak, because we're going to have a weekly call where your class is going to be on a weekly call from then until the end of time, or until we had enough, or until you guys want to leave. And it's all about keeping that community feel. So to qualify for school, you have to be a subscriber to our channel. You have to follow me on Twitter, follow Sheldon on Twitter, follow CryptoBanter on Twitter, and follow Arena on Twitter, because if you don't follow Arena on Twitter, we can get Arena to select some winners, right? Yeah. I also want to say a big thank you to you guys before we start our Friday banter. We looked at the stats again today. We do have the most loyal, even in the bear market, we have the most loyal crypto community out there. The number of subscribers that watch every single video is the highest in the entire crypto universe. So even though some channels do have more subscribers than us, the ratio of subscribers to views, we have the highest, according to an analysis that we did. So thank you for being the most loyal community in the whole wide world. Anyway, it is Friday today. What do we do on Fridays? On Fridays, we banter. Huge banter today. We're going to talk about Binance. We're going to talk about the Binance Fud. We're going to talk about markets in general. We're not going to talk about HEX because we've spoken about HEX, but we are going to talk about a lot of other things that Richard Hart's got on his mind. So let me welcome the panel for today. We've got Alex Mishinsky, good friend of the channel. Alex, welcome back, my friend.
Hey, Ryan. How's it going?
Great. We've got Richard Hart. Richard, welcome, my friend.
Hey, how's it going?
Yeah. Rich, the 1700s called. They want their candles back.
You know, it's actually, you get lung cancer if you put out your candles by blowing on them. If you have a particulate meter in your room, it just explodes with the particulates. So you got to like damp them to turn them off. Random fact.
So when can we send those candles back to the 1700s?
I'm actually, you know, if I could go back to the future, man, I'd buy Bitcoin on at a penny instead of 30.
Gareth, welcome to our Friday banter. We're putting you out of your comfort zone because this is not where we talk about charts, and this is where we actually like talk about real things, fundamentals and stuff like that.
Hey there, how are you guys doing?
Fantastic. Gareth, what are all those charts that you're looking at in the background? It looks like there's a lot going on there.
Yeah, it's some crypto, it's some stocks, it's some commodities, it's kind of whatever's moving for the day. I've got to keep my eye on.
What is moving? Is there anything worth looking at today?
Relatively quiet. I'm keeping an eye on the stock market. We had a topping tail, which is a technical bearish signal a couple days ago in the S&P and in the Nasdaq. And I'm just kind of keeping an eye on that, seeing if it holds. If it does, it could start a deleveraging in stocks, which could bleed through to crypto and send crypto down through that 30,000 level. But it's still on watch. It hasn't happened yet.
It hasn't happened. In the meantime, the stock market's at all-time highs. I saw the Dow Jones broke through 35,000 for the first time in history. It looks like the stock markets are crash-proof. It looks like the Fed is making sure they keep reiterating that they won't let the markets crash. They're not even thinking of raising interest rates.
It's amazing when you can kind of create the rules like the Fed does as they go, how you can keep things up, isn't it?
Yeah.
Can I say, like, if your mission is to not let it crash, is that what vertical line forever means? You realize there's another thing, like just called sideways, like crabbing. They're obviously doing something other than not make it crash because it's like a vertical line. You know what I'm saying?
Yeah, you're 100% right. It's insane. It is insane.
No, number go up. Stock markets only go up. Number only go up. They don't know what stock markets sideways go down. Stock markets cannot go down.
Well, so this is the kicker, right? Is that if you look at 2007 and you look at 99, 2000, right before the markets had these epic collapses where they dropped 50, 60, 70%, you know, this was the same thing that was going on where people just were like, oh, it's so easy. You just put money in. And you even saw it in Bitcoin when we were at 65,000, right? I mean, you know, the mailman comes to my house and he's like, oh, you know, I just bought a little bit of this cryptocurrency or I just picked up some Dogecoin, right? And that's always a dead signal. So whenever it seems too easy to be true, usually you have a collapse. And the kicker too is that the more the Fed intervenes, the next collapse will be even worse. And we've seen this in the financial crisis in 2008 and 2009, is that the Fed intervened after the .com and created the housing bubble and the real estate issues. And then we saw the collapse there. And here they've done it to the nth degree, where it makes me concerned. Now, listen, I'm a trader, I can invest, but there's a lot of Americans and there's people all over the world that have 401ks and pensions, and that's really where the hardship could come in the future.
Well, it's the everything bubble, right? The bond market is at all-time highs. The stock market is all-time highs. Real estate is all-time highs. So the Fed is pumping every asset, and at the same time is debasing the U.S. currency, right? we're talking about $7 trillion that have been added to circulation in a year and a half. So it's just a crazy time, right? I'm actually very surprised that both gold and Bitcoin are not doing much better, because you would think that Bitcoin would be at all-time highs right now, considering all this new printing. But Bitcoin already had its correction. So the question is, are we a leading indicator, or we're just taking a breather before we go to new all-time highs?
Yeah, and I think that's exactly what it is, you just have to wash out that kind of money that flowed in for easy access, and markets do that, whether it's stocks or crypto or commodities, where you get these massive runs and then you have to flush out the weak hands, and then it'll resume its uptrend. There's no doubt in my mind that the long-term prospects for Bitcoin are golden, especially as the Fed just continues to try to say that inflation's transitory and all this nonsense. But inevitably, you can't print this much money all over the world. And remember, the dollar's actually held up really well lately, but that's because every other country is doing the same thing as us. But that's why gold and crypto longer term, in my opinion, are where you got to be.
Well,
gold's garbage, dude. Gold is absolutely trash.
If we want Bitcoin at all-time high, all Ron has to do is redirect all of his followers to go to Reddit and pimp BTC instead of some meme stock, So that's all you need to do.
I wish I had the same power as Wall Street.
Let's talk about the.
I can buy a bunch.
Let's talk about the SP 500, right? Everybody's talking about the giant crash of the S&P 500 for decades. It never comes. Everyone gets left behind. Anyone that shorts is liquidated. And they just debase the currency. So if you go to Venezuela and you look at their stock market prices, it's a vertical line because their currency is not worth anything. And as long as the charts you're looking at are stock prices in dollars and they're printing dollars like they're going out of style, every chart's going to go up and to the right. So now let's talk about when it goes wrong. Let's talk about when you finally get a quote correction. How much do you think the S&P 500 dipped in the 2009 global financial crisis? 57%. That's it. It dropped 57%. Bitcoin's down more than 57% now. So you look at a chart that always goes up and to the right forever, and you think this just can't continue. And then you either get into cash or wait or hope for a dip, and then it never comes. And then even if it does come, it only dips 57%. So
right,
it's
but keep in mind, when you talk about the pros that are in long term or from the very start, you're right. But there's so many people, and this happened with Bitcoin too, right? Think about the people that jumped in at 60 or 65,000. Those are the same people that can't take the pain when you're at 30,000 and they exit. So I agree with you that long term markets always go up, whether it's gold or crypto. And I know you don't like gold, but you're going to see these types of situations.
I got a ton of it here. I buy the shit out of it.
I see that candelabra. That's beautiful, man.
These Rolexes appreciate faster than gold does. So,
well, by the way, Gareth, meet Richard Hart. You'll learn a lot about Richard Hart.
How do you not get a neck cramp from those monitors, bro? There's no way that top right monitor is getting looked at.
Well, I keep the porn on the lower one, so that's where I usually focus.
Respect.
Okay,
respect.
Guys, let's get back to a few questions. The first question is around Bitcoin and whether Bitcoin has preempted the Nasdaq or preempted the stock markets by correcting, and if not, there could be a big risk that if the Nasdaq does take a 10% correction now, that we could see another 50% correction in Bitcoin. I mean, we know how sensitive Bitcoin is to the New York stock, to the American stock market. What do you think? I mean, do you think that Bitcoin preempted, or do you think that Bitcoin is going to continue to rise? Gareth, I know last time we spoke, you said you're not ready to dip your toes into Bitcoin yet.
Yeah, that's correct. So I still see us hovering in a bear flag formation where if we break and really close below 30,000, you got to see a washout. But then I'm ready. I mean, I've got my account loaded with plenty of cash ready to jump in once we get down to around the 20 or 18,000 level. I know that sounds painful for a lot of people, but think about it like stock markets, right? I mean, you're going to have these big dips in assets. I liken Bitcoin to something like a small cap. Now, I know as $1 trillion asset, it's not really a small cap, but in the scheme of the entire stock market, it still is. It's still in its infancy. So small caps get bigger corrections, versus the S&P, like we talked about, correcting just 57%. Those big corrections ultimately lead to further upside if it's a good asset like Bitcoin, and especially with the money printing. And the Fed can never get out of this mess, right? So they're going to taper, they're going to do what they got to do, and then the next crisis will come, and they'll have to print another, $10 trillion and lower interest rates to the negative territory. So shorter term, you're going to get volatility, but I will be waiting to buy Bitcoin, no doubt.
Richard,
Dead cat bounce, garbage. Not even a bull flag, dude. Okay, let's get into TA here. First of all, giant head and shoulders, right? I called it on the day. You got the chart sitting in front of you, Rand. Put the chart up if you can.
Let me find the two charts that Richard's talking about. Here we go. Is this the one, or is this the one?
That's the Ethereum one, but that's the Bitcoin one, yeah. So I drew the chart. I'm like 2017 CME, all Wall Street bought, and then that was the big buy the rumor, sell the news. Okay, now we got the news. Now CME launched. Straight on the day of the CME launch, dropped forever, for years. It went down for 1 year, down 85% because of the buy the rumor, sell the news, big Wall Street event.
So just to be clear, the yellow line is the 2017 chart.
It's the 2017 run up and the 2017 fall down on the daily, matched literally pixel for pixel on the very top there. So I was like, hey, here's our parabola. Here's our falling out of it. And what happens when you fall out of a parabola? You retrace 85% of the run up. And we actually do worse than that in crypto, because we don't just retrace 85% of the run up. We retrace 85% of the whole value. So if you take 20K and you remove 85%, you're sitting at 3K. That's the math. So now look at that chart and look at where we are today. Really super similar, except now because our mass is heavier, it's harder to pump us up. So we have a little bit less moving up. And then when we fall out a little bit slower because we have damped volatility. We got more, institutions with limit orders. It's not all just retail now. So you have an elongation of the cycle a little bit. So now in a normal bear flag, here's a bull flag. You go up, and then it goes down for a while, and then it goes up again. And so your bear flag or your bull flag tends to move the opposite of the bull movement. And then in a bear flag, it's the other way. You dump, then you go up for a while. You get a relief bounce, and then you dump again. The market is so weak in Bitcoin that you can't even get a relief bounce, and you can't even get a normal looking bear flag. You can't even get a normal looking pendant. What you're getting there technically is a waterfall, a falling off a cliff, a dead cat bounce. And look at it. It's just about to die. We've tapped horizontal support at 30 like 6 times now. This looks like a perfect fractal. If you want to zoom in, it looks like a perfect fractal of the 6K trying to hold 6K back in 2018. When you're like, oh, we're almost there. We're almost there. I mean, you can zoom in. You see that yellow stuff? You see the yellow stuff there? So the horizontal support at the very bottom of the yellow stuff, that was 6K. And then eventually it's just like, nope, we can't hold it. Capitulation, total and complete capitulation. And that is exactly what it looks like now without even the good bounces. It looks more of a waterfall, more of a curved shoulder. It's disgusting. The chart for Bitcoin looks like absolute garbage. And
you're in
premiums,
agreement that it's headed lower. You're saying 10,000, or you're saying
it's going to 10K. 10K.
10K. Yeah. So my short-term target for the next 3 months is 18 to 20. And do you have a time frame on that?
Yeah, we should be down at 10K within a year.
Okay, cool.
Yep. I mean, if it's a fractal of last market, it would be 9 months from now, but it's an elongated cycle.
Are you long-term bullish after that, or are you done?
Hey, they're printing money out of helicopters, bro.
Okay.
They're literally just dropping helicopter money everywhere. Yeah, we just need to let people sell the bottom, and then we can go up again.
Yeah,
it's a great industry.
No, I love it. I love it, man. Yeah. I mean, if it goes to 10,000, I'm ready. That's the beauty of it, is that I'll just keep putting aside money and just keep investing.
You want to see a worse chart? Look at the Ethereum chart. If you want to see a worse chart.
Wait. Let's finish this conversation first.
Yeah, let's finish the Bitcoin chart.
I feel bad for Richard and Garrett that both of them are not going to get to buy any Bitcoin because it's not going to 20 or 10 or 12 or whatever. And I'll explain to you why. Correlation is no causation if you're a Matrix fan. And what happened in 2017 has nothing to do with what's happening right now. 2017 was the first time that futures were introduced. It was the first time that institution got a chance to short Bitcoin, right? And since you were at the peak, it was a perfect opportunity to just load up, short all the hype, and take out all the weak hands, right? Obviously, we don't have that repeat today. The second part is that all the money printing did not happen in 2017. It just happened in the last 12 months. So all of this debasement that we're talking about is just now hitting the street. It takes it a little bit of time to take place. It's a Cantillon effect is just now propagating across the 330 million Americans who don't even understand where all this money is located. So I think I've stated publicly, I think it's going below 30 because of other reasons, right? Like GBTC and so on. We talked about that last week. But if you're going to wait until it hits 20 or 10, you're just not going to get to buy any coins. So my recommendation to people who want to average in is don't care. It doesn't matter what the price is. Every once a week, you should load up with what you can, and you'll buy some cheaper. You'll buy some at a higher price. We don't know what that correction is going to be.
Hold on.
We're going to 140 to 160,000 this year because there's more demand than supply, and that's all that matters.
So this is a battle between on top
I'll bet you.
and on the
Like,
bottom technicals, right?
We have a friendly bet.
I'm saying the technicals are looking very, very, very bad. Gareth's saying the technicals are looking down to 18 to 20,000. Richard's saying the technicals are going down. Bitcoin's actually going to be at 10,000. We're saying fundamentally, there's so much money in circulation that every single asset in the world has repriced itself or is repricing itself, including cars, including real estate, including computers, including everything else. And where do you reconcile the two? How do you reconcile?
So let me finish. Let me finish the fundamentals here. So we are going through effectively. We are flushing out all of the offshore players. Binance is an example of an offshore player that's being flushed out. Every country, every day, you hear a country announce, we don't have Binance, we don't support Binance, it's illegal for Binance to operate in Hong Kong or Cayman Islands or the UK or whatever, right? So you still have a lot of FUD, you still have migration of funds that has to take place. All of that is negative, it's negative pressure, but all those are one-time event. China exit is one-time event. Binance is a one-time event. So we do have to go through that. GBTC is a one-time event. The fundamentals are still more demand, less supply, higher prices.
I disagree. So first off, China has banned Bitcoin 45 or 50 times. It's definitely not a one-time event. And even if we think it's a one-time event now, because they finally banned mining, they could ban wallets, right? So even though we think that they're finally done banning, no, there's actually like 1 or 2 extra bans they could finally do.
I just posted on Twitter a steamroller crushing miners in China. They've never done that before. Okay, so
but it's the video is from Venezuela, though.
We're talking about half of all the hash power in the world leaving China or being crushed physically, literally being crushed. So that's not a repeat of what they did 50 times before. Okay, the hash power.
I agree. It's a massively different.
The hash power is already down 50%. That never happened. Never happened.
I agree with that.
So all those.
But they've always escalated. It's just another form of escalation. They've always added to it. I'm just saying they have one more level they could add to.
Your house is on fire. Before you were talking about maybe the house will be on fire. Maybe I need to get fire insurance. Smoke is coming out. You're on fire. Look at this. Look at this.
The only thing left they could ban
millions
is
of dollars
wallets.
worth of equipment being physically crushed. Right?
Yeah.
Look at this. This is not. We're not talking about maybe and some statement or some.
Yeah, but that's Venezuela. It's a video from Venezuela. It's not actually a Chinese video.
It is Venezuela.
Yeah,
okay.
Yeah, but I love it. Listen, that's better. Look, the world doesn't need to burn electricity to do consensus. We have tons of very effective, working wonderfully fine proof-of-stake networks. You don't need to destroy the environment.
Bitcoin is not going there. Okay, Bitcoin.
Why not? Bro, all you have to do is you just have to get the developers to grab their balls and
logic.
do it.
Richard, you're talking logic. This is not logic. I was brave enough to jump into a Bitcoin Maxi's room on Clubhouse, and they took up their M16s and started shooting me. I mean, I got
instantly banned.
Yeah,
Instantly banned.
That's not brave. That's called stupid. Jumping into a Bitcoin Maxi's chat on Reddit is stupid.
I just wanted to have a conversation, Ron. I asked like Richard. I said, why can't we even think about proof of stake instead of proof of work? And man, I mean, the guns were out. I mean, so
Crazy.
yeah.
So
They don't use logic.
How do you reconcile the fact that every single asset in the world is repricing itself upwards? Property in the US is repricing itself upward at the fastest rate that it's done in hundreds of years. I don't even know if it is hundreds, but in generations. Every single asset, stock markets have doubled since the beginning of the pandemic and gone up 50% or thereabout in the last couple of months. How do you reconcile that against crypto, which is the most disruptive asset class in the world, declining in the same period?
So listen, one of the things you got to keep in mind too, and this is, I actually agree with both people, right? So the fundamentals for me long-term are strong, right? But that doesn't tell us the shorter term moves. The shorter term moves are where I rely on the charts to give me that edge to kind of where is it going over the next month or two. What the kicker to me is that you have a lot of leverage in the system. You've had so much printing of money from the government, sending out these checks. People have put them in. People are looking to like the stock market at all-time highs. People are using margin. So margin, right? The margin numbers are showing all-time highs. People are leveraging themselves. So when I look at the charts, what do I see? I see a deleveraging event occurring where it's going to be across all asset classes in the short term. It could be a taper tantrum from the Fed. It could be, I mean, who knows, something with China. I know that the US just warned on Hong Kong today, and then China's really pissed about that. The point is that when you get some sort of sell-off in any asset here, stock market or anything else, it's going to cause a deleveraging where people are going to be over-leveraged.
That's what we just went through.
Create the sell-off there.
The flash crash in Bitcoin is exactly that. It was a deleveraging event. We already went through that.
So you're saying that, you know,
we're the lowest leverage
right now. I mean, when that comes down, people that are holding Bitcoin, they're not going to, when they have to cover a margin call because the S&P drops 20%.
There is no margin call. Binance liquidated 1.5 million accounts.
Yeah, but I think
everybody deleveraged. There's no leverage in the system.
Alex, I think you guys are talking about different things.
GBTC is the last piece of leverage. The last piece of leverage. That's why I keep telling you that there's only one more step, and then you go on higher. There's no leverage. Where's the leverage?
He's talking about other assets being leveraged.
I know, but that's my point.
Exactly.
So
I have assets in crypto. I have assets in the stock market. If let's say I'm along the stock market a ton and I'm leveraged, right? If the stock market drops a percentage, I'm going to get margin calls. Well, where do I cover that margin? I have to go to the crypto market, sell some Bitcoin. That's going to create pressure. That's kind of what I'm talking about. I'm talking about other assets.
Leveraging of stock markets in the world. We've had the Bitcoin deleveraging. We've had that, and I agree with you that the GBTC is the last bastion of Bitcoin leverage. But we haven't seen a stock market deleverage. And if the stock markets get deleveraged, and rest assured that the stock markets are higher leveraged than Bitcoin is at the moment. It was before the crash. If the stock market's deleveraged, people are going to get margin called, and when they do get margin called, they're going to liquidate their crypto portfolios. Because
the thing is, like, when has crypto ever had bad fundamentals? It's always had amazing fundamentals. Always. It's all Swiss bank account in your head. Cross these borders, get around currency controls. Average 2x per year price performance in Bitcoin. That's all awesome. And yet it still drops 85% every 3 years. The fundamentals are not enough to keep a price up. It's just not.
Okay. So
this is a show every week because we can compare notes and see what happens. You know,
bet me $100,000 that I bet Bitcoin goes to 20K, and you can choose like a top range, like what, 75, like 85.
I don't need 75. I mean, I'm talking about. First
65
going lower.
I'll bet you $100,000 that Bitcoin is going to 20K before it goes to 65. Lower.
I think I was the first.
Yeah, but well, guess how?
To publicly tweet.
So I'm saying 10 and you're saying 20, I guess. Like, how much, where's your low at?
The issue is not, is it going lower? We all agree it's going lower. Okay. The issue is you saying that it's going to be lower for a year. And I'm telling you.
No, 9 months is a fractal.
This year it's going to be at all-time highs. That's the conversation. The conversation is it a quick.
This year is only 5 months long, right? Left? I mean.
Is this? No, you said for a year, not this year. For a year.
No, I'm just telling you the fractal. So I'm just saying, look, we did a year last time, 365 days to the day, 364 technically. And our cycles are a little tiny bit longer now, maybe 10% longer. So the fractal of that would be like 10% over 365, which would be like 400 days. We've already done about 100 of them. So in my fractal model, we have about 300 days of bear left.
Look,
if the fractal holds.
The piece that Garrett and Ron was talking about, where if there is a flash crash in the stock market, that would
then you can get up higher. If you flash crash and wash everybody out, you can get up higher. It's when we do this dicking around and trying to hold a level that we don't wash people out.
Bitcoin unfortunately is fully correlated to the stock market. Unfortunately,
sure,
right?
Yes.
We need to get that. We need to get that separation. It eventually will happen, but today it's just not happening. Every time the stock market had a hiccup, Bitcoin went lower. Actually, it goes lower before. March.
That's the big risk. Stock market at all-time highs. Bitcoin at 55% off its all-time high. Basically, what we're saying here is that the stock market is due for a correction, and that when that stock market correction comes, Gareth says Bitcoin's going down to 20,000, and Richard says it's going down to 10,000.
They could blow the brains out of this economy and just keep hyperinflating like Venezuela. Like literally, they could do that. So just betting that they won't do that. They're handing out money directly to citizens, bro. They're literally like, here, have money directly with a check. You've ever seen that before in your entire life? It's never happened before in the history of the American nation. Money directly to citizens. They've never ever done that in the history of the nation. Just handed people checks, like everybody have a check. It's never happened before, never. So what they could do more of that, man. Like I wouldn't bet. Like if you bet against dollar devaluing, that's what you're doing. Like when you're saying the stock market's going to crash, it's very, very rare. And when it does, it doesn't crash as hard as you think it would because they are willing to helicopter money now. They're willing to negative interest rate.
That is that they're always going to be there to helicopter money, right? So, but I think it's important when we're saying a crash, right? I mean, for me as a trader, and I'm a shorter term trader, you give me a 10% correction in the market, I'm making money, right? So I mean that's what I've been doing here is I've been slowly shorting the market. By the way, one of the interesting factors is that if you look at 2017, right, when crypto made that high just under 20,000, there was about a couple month lag before the stock market actually had a big correction as well. And that's kind of an interesting little thing. I think someone just mentioned that generally crypto leads the stock market.
Yeah,
so that's just a little point there too.
It's true. It's true. It
That
shows
would
on the
be
chart.
absolutely scary. That would be absolutely scary because if we've had a 57% correction and the stock market corrects 10%, we're having another 57% correction.
Yeah, that correlation, I've seen it before. Yeah.
Okay, let's talk about Binance and FUD, Binance FUD. So when you look at the Binance headlines, the Binance headline starts something like this. Hong Kong's SFC says no entity in the Binance group is licensed or registered to conduct regulated activity in Hong Kong. The perception that everyone gets is that Binance is banned in Hong Kong. The reality is they're only talking about regulated activity, which is in this case specifically talking about synthetic stock assets. And within a few minutes, there was clarification, and the Hong Kong SFC warning Binance earlier today it was focused on stock tokens. Binance has now suspended their stock token offering. Same thing happened in the UK with the Binance FUD. What is it about this Binance FUD? Is there a fire? Because there is smoke. And there was smoke from the UK, and it seemed like it's nothing. There was smoke from Hong Kong, and now it seems like it's just on a very small part of it. The reason why I'm asking this is because the one thing that could really crash the crypto market is a Binance collapse. The biggest exchange in the world, most assets custodied on the biggest exchange in the world. Should we be worried about Binance? Should we be worried if you've got assets on Binance? Should you be worried? Should we, as bigger crypto market participants, worry that Binance could be closed down by regulators or taken on by regulators and assets seized? I mean, is that the biggest market risk at the moment?
Well, I mentioned this before that I see a direct correlation between the number of ETF applications with SEC and the crackdown on Binance. Because when you have 7 or 8 billionaires applying for an ETF, and the SEC keeps telling me, oh, there's too much market manipulation. They say, well, what is the market manipulation? And they say Binance, and they're like, go do something about it. So I think regulators worldwide agreed to do a crackdown. It's not just the synthetic stocks, it's also the leverage, the ability to take 10, 50, 100x leverage, which is considered a regulated activity in most countries because it's a derivative play. All of that basically is because more and more pressure is mounting on the SEC to approve an ETF. So you have Binance, you have what's her name, BitBuy, I think, or whatever their name is. Also announced they're going to start doing KYC. So you start seeing more and more of these offshore players being squeezed and being limited in what they're actually allowed to do.
The Italian regulator has blocked consumers from investing in crypto through Binance on all its platforms. So that's Italian. I mean, it does look like Binance is in a little bit of regulatory trouble. I mean, that is the perception.
People are just going to move their assets from Binance. Nothing. It should not affect the price of Bitcoin. It should not affect. Yes, there's a little bit of FUD, but just like we can continue living and making going higher without Elon, we can do that without CZ.
I got to tell you, man, I got into crypto to, one, multiply my giant wealth into more giant wealth, two, have freedom, power, self-autonomy, all the things that America was created for. Like America told the UK to go away, you can't lead us anymore, and did its own thing. That's what I got into crypto for. So when I see people giving their keys to Binance so that they have to send hostage videos to try and get their money back, and they don't get their money back, it disgusts me. That's the opposite of why crypto was invented. When I see people taking 125, 133x leverage and getting liquidated on a 3/4 of a point move, it disgusts me. When I see these ideas that Binance can crowd, like, what do you think Binance actually performs as a good service in the world to make humans healthier or happier? Trading gets everyone destroyed. Hostage selfish videos, that ain't no good. Making it hard for an ETF to get licensed because people think they're doing, unregulated activities. And so, like, why should anyone actually like that Binance exists? There's only two things that I consider that they do.
Because my mom doesn't want to hold her private keys. She doesn't want to buy Bitcoin on OTC. She wants to go to Binance. She wants to buy the assets on Binance. And she wants to store them on Binance because she doesn't want to worry about key management and cold storage. And to millions and millions and millions of people around the world, Binance provides an amazing service which allows them to buy Bitcoin and many altcoins, more altcoins than most other exchanges, very simply, and to store them in a place that they trust.
Well, man, that's how you got Mt. Gox, Cryptopia, Quadriga CX, BTCE. Who else? What's some other big guys that went down? Kucoin got hacked. Binance got hacked. BitMEXC founders are arrested. OKX founders paused withdrawals for a month and a half because their founders were arrested. I would rather see your mom use the CME futures that have licenses, or Coinbase that has licenses, or Kraken, or Bitflyer, or I can list you a bunch of licensed places where when they steal her money, she has a chance of maybe getting some back. If you lose your money with Binance, you're never getting anything back. Nothing, ever. Because who are you going to sue and where? I dare you to tell me. Who are you going to sue and where to get your money back? And if you
that was CZ calling to ask why we're hitting on him, why we're beating
because he
him up.
deserves it. I know people that cannot get their money off of that garbage. Period.
No, I agree with you.
Disgusting.
I totally agree with you. There's enough regulated operators that do a great job. That don't give you leverage, that protect you from doing stupid things. Why are you using offshore unregulated providers? So that's really the question.
No, let me take the other side. What the government's doing is unfair too. Now here's the weird part. They're both doing bad stuff. The government's doing bad stuff, and CZ's doing bad stuff with his 125x leverage. Ha ha ha. Look, everyone's losing their life savings. Isn't that great? The government shouldn't tell you that you can't do business with an offshore company and pretend that their jurisdiction applies globally. Because then China could say, you know what? We don't like Winnie the Pooh. So we don't have any, like, you can't let China's jurisdiction work globally, and you can't let American jurisdiction work globally. Human beings should be able to choose to do business in the jurisdiction of their choice. And if the server is in that jurisdiction, the business is in that jurisdiction. And it disgusts me that you don't have any competition amongst countries, because the governments of these larger countries, these hegemons, they execute their will on the entire world. Try and get a bank account as an American, I dare you, in any foreign country.
You can't.
It is horrible.
But look, Binance US is doing all the right things and not all the wrong things. So users, Americans at least, can get exactly what you just described without any problem. So it's not
But like,
There is
DeFi
the right
solves
way
this.
to do it, and there's the wrong way to do it. So
DeFi solves this. You
I know, but
you
look,
need to get in one coin to another
Richard,
coin.
Richard,
Screw
90%
Binance.
of the people in the world, 90% of that 7.8 billion people don't even know what DeFi is, and they don't understand what smart contracts or private keys are. So
Well, they will soon,
you want your
because
bags, you want your bags to be worth 100 times more. You need the rest of those people to come into crypto, and they're only going to come into a service that manages their keys, just like Facebook is managing their password. So the issue is, there is a version that does not give you that leverage. It's called Binance.us. The question is why everybody's insisting on using the offshore. We're hooked on leverage. That's the problem, right? We, meaning the majority of the crypto community that is a gambler, that is not a hodler, like Celsius is a hodler community. Our people are not looking for leverage, right? Even if you gave it to them, they wouldn't take it. So we just need more hodlers and less speculators.
All right, guys, I want to move to GBTC. I want to just talk about this. The big release started yesterday. There are 41,000 Bitcoin over the next couple of days that are being released. How long will it take for the market to clear this overhang of GBTC stock and to bring the premium, the discount back to some kind of normal, not 15%? Because if we look now, this is the release that's scheduled for Sunday, which is 16,000 Bitcoin. I think we then have another one on Monday, which is another 10,000 Bitcoin. Another one on Tuesday, which is, well, there's another one here on Tuesday, which is 4,000 Bitcoin. This is a big.
Also, yeah, you should also look at the volume on GBTC, because a lot of it has to do with how much retail is there to pick up the slack, because the institutional guys are trying to get out of the Roach Motel. How much retail is there trying to buy this? And if that volume is down 50 or 75%, like it is on major exchanges, right? Like the volume on Binance is down 50%, right?
Tell Michael Saylor to get a loan and buy the dip. Michael, are you listening? You need to go and do another bond raise and buy the dip, brother, because crypto needs you. The electric cyber hornets need you, dude, because their beehive is getting wrecked right now. Please, Michael Saylor, save this market.
Okay, so I mean, let's quickly go back to this. Is this the reason why the prices are depressed and the Bitcoin volumes on exchanges are very, very low? Because people are picking up GBTC shares at a negative 16% discount, at a 16% discount.
I don't think so. There's not that much crossover. The people who FOMO at your normal exchange are not like fund managers getting into, the PP, like that. They're just different markets, man. Now here's the problem. Like, let me rephrase that. Retail does not usually have access to GBTC. Like a guy that's on, Binance doing 100x leverage, he's not buying BTC on GBTC. But institutions, some of them can buy both normal spot Bitcoin and GBTC, and then some institutions are limited; they can just buy GBTC. So it's
institutions don't want Bitcoin, and therefore they're not buying GBTC.
No, they institutions do buy. That's the majority of their client base is institutional. So
yeah,
I mean,
but they don't want Bitcoin, which is why.
But Richard, it's when they say when Grayscale says the majority of 90% of our transaction institutions, these are people contributing Bitcoin, not buying GBTC. So and that's what they don't tell you, because they used to publish that stat and then they stopped publishing. Why? Because everybody that looked at it said, "Wait a second, you want me in the Roach Motel, but only 10% of the buyers are retail? That doesn't do anything." So right now, the problem is the volumes are down and you have this huge unlock, right? So there's an imbalance. It's going to take a very, very long time. That's my point. It's going to take a very long time for this discount to disappear. And I agree that there is no
very long time, Alex. Define very long time. 1 month, 3 months, 6 months?
No, 6 to 9 months before you're going to see that discount disappear. But the problem we have is that we liquidated a 1.5 million customers. 1.5 million tourists left crypto land and went back to fiat land because you squashed them. You eliminated all that leverage and you squashed them on Binance. Or you squashed them on some other leverage exchange. So the problem is we are burning customers. Instead of adding and increasing the base of customers, we are flushing customers and we're shipping them back to fiat land.
I agree with him. 100%.
Okay.
Yep.
Let's stop doing that. Let's stop giving people leverage. Let's stop helping people get wrecked. Let's
It's a free
get them
market.
to hodl.
It's a free market. If there's an opportunity to provide leverage and there are enough buyers, then people will fulfill the need for buyers.
Selling kids drugs is a free market, right?
How many Celsians are on Banter right now? Okay, just say hi. And I want any one of you, anyone who got wrecked on Celsius, to say, sorry, I got wrecked on Celsius. Let's see if you have one guy, one person, right? Why? Because you can't take leverage. You cannot lose money, right? I mean, that's the whole point. So the issue is that are we going to empower? Are we going to empower?
Tool in every market. It's an important price discovery tool. It caters to a bunch of institutions and hedges and degens. I mean, every market.
You need an ETF. That's all you need is an ETF. And in the meantime, you got this quirky thing called BTC.
Gareth, come in, Gareth. Over.
Yeah,
Gareth.
I'm here. I'm just enjoying the banter. So listen, I think bottom line is when it comes to leverage, right? I mean, there's always going to be people that are going to want to take leverage. You can always try to clamp it down and say people shouldn't, but like people are gamblers at heart, right? I mean, we have that mentality. I don't do it. When I buy Bitcoin, I just buy Bitcoin. I buy it on Coinbase or Kraken or one of these places. But yeah, I mean, it's just, to me, the leverage is, who takes the leverage? And this is what I see in my business as well with stocks and options. It's the people that have the least amount of money, and they want to basically take that $10,000 or $5,000 and make $1 million overnight. I tried that when I was a beginner trader, and I lost my money every single time. You just got to be smart about it, and I wish people would not take leverage, but free markets are free markets.
Well, the regulators are trying to crack it down and saying no more, right? That's what the regulators are trying to do. When you see country after country saying Binance and its practices are not allowed here, right? What are they saying? They're saying we don't want leverage being issued to our citizens. That's what they're saying.
And it's a good idea because it's the worst thing you can do for your finances.
Yeah.
Someone somewhere is going to launch a decentralized leverage exchange, and they're going to.
It already exists.
It already exists. So I don't think we're going to ban leverage. I think we're living in a fairy tale if you think that leverage is going to be banned. It's a part of every single market in the world, and for as long as there is a market, and some entrepreneur is going to fill that gap, and that's what's happening right now.
Right, but one thing I would just say, Rand, is that right in the U.S. as a day trader, I get 4-to-1 leverage. As if I'm holding overnight on stocks, I get 2-to-1. I mean, there's 100-to-1 can be regulated, right? There's no real reason. 100-to-1 is ridiculous. So I do think leverage is fine, but you do have to have some regulation probably that brings it in a little bit.
I'm trying to see if I can get CZ on the show next week because I really want to hear this from CZ's mouth. We are good friends. So I'm going to try and get him back on the show this week. Okay, what I want to talk to you guys now is about something that our viewers keep asking us. And they say, look, if you've got $10,000 today or $100,000 today, that's your investable money. So you have a house, you're paying your rent, whatever else. You have $10,000 today. What do you do with the money? Where do you put the money? Do you put it in property? Do you put it in gold? Do you put it in bonds? Do you put it in crypto? Do you sit on cash and sit on your hands? And if you do sit on cash and sit on your hands, how long are you sitting on cash and sitting on your hands for? Help our community want to know what to do with their money. Freddie, you wanted to ask something.
AMC on leverage. That's what we're doing. AMC on leverage. No, I'm just kidding.
What's your time frame, Rand? That's important.
12-month time horizon. What do you do? What do you do with $100,000? Let's call it $100,000 just because it's easier to divide. But if you have $100,000 today, you don't want to stay in cash because if you stay in cash, you're getting 2% on most DeFi protocols, 8% on Celsius, 20% on some other protocols. So your option is sit in cash and put it into Celsius or whatever and get 8%. Option one. But you do take some counterparty risk for whatever that's worth. Your other options are gold, crypto, stock markets, bonds, silver. What do you do with money now? I have some cash.
One thing for sure not to do is not to buy bonds. Okay, so I think that's kind of like suicide mission. Okay, to buy bonds.
If you had $100,000 to invest today responsibly, no bullshit, responsibly. You want to protect wealth. You want to make real money. This is your total investable income. Where do you put the money?
Right.
Today.
So I
Given
think
that, given that stock market's at an all-time high, gold is at 1,800 and in my mind completely obsolete. Bitcoin is 50% down from its high. I can see Richard and I can see he's thinking about Hex. Okay, Rich, you're not allowed to invest in your own projects because I know you're going to say Hex.
Can you donate it to a medical research charity?
No, not anything but your own projects.
Sure. Yeah, I mean, look, you're gonna, even sitting through a dip, you'd be better off buying Bitcoin half off and waiting than any of that other crap. So I think Bitcoin's going lower, but even if you bought it now at 31,500, you're still better off holding that. So basically, like, I know that you're restricting my answers, but like, I would buy Ethereum over Bitcoin, and I would buy some other things over Ethereum. And then, but like, if I'm only allowed to say Bitcoin, then fine, Bitcoin's better than the stock market, better than gold.
As long as it's not Hex or Pulse.
I would buy Celsius over those other things. So like, I mean,
let's treat this as a serious question. If you have $100,000 to invest now, and there are a lot of people that do have investable cash.
Sure.
Where would you people put your money? And the reason why I'm asking is you're all different. Gareth is a full view trader across every single market. There's more screens than markets there are in the world behind him. Alex is a very responsible investor, and Rich, you were a billionaire by the age of 14. So between the three of you, I'd like to know.
If the set of answers is stuff that people know about, I would take Ethereum.
You would take the full 100,000 and put the full $100,000 into Ethereum. That's your total investable cash. Is that not
works fine? It's got a bright future ahead of it. So like, yeah, that would be fine. You could do it in Bitcoin too. You're going to make way less money. I haven't checked the Celsius chart, but I mean, it's been making new all-time highs recently. I think maybe a couple weeks ago.
So we talked about the fact that we agree that it's probably going a little lower, and we think there's a pretty good chance there's going to be some kind of a correction in the stock market. So because of all those things, I would put 20 to 30% in cash just to be ready for those opportunities. So even though cash is getting debased very quickly, and the inflation of cash, like last year, the inflation of cash was almost 40%, right? People just don't understand that. 40% new dollars were created last year, right? That's 40% inflation of cash. So, but you need to have some of that liquidity in case the stock market crashes or Bitcoin crashes or something else happens. So I would do a higher allocation, again, that up to 30%.
30% cash on Celsius at 8%. Next, other 70%.
Yeah, so I would still hold some stocks, right? I think I wouldn't touch any bonds. I think commodities already appreciated, so you don't want to touch that. So I would do the rest of the allocation between crypto and stocks, probably 50.
Which crypto?
Bitcoin, Ethereum, and your other favorite project.
Okay. Gareth.
The thing is, like, Ethereum went up 40x from $88 to 4,400. Bitcoin went up 3x less than that. It went down to 3,800 and then went up to 65,000. So Ethereum, over the dip between COVID and its high, there's a 3x difference that Ethereum outperformed Bitcoin. So even if it's like, if you're worried about catching a dip by holding dry powder, you're missing out on like 40x run up, 20x run up. And the run ups in crypto are so harsh to the upside. And so if you analyze the charts, cryptocurrencies make all of their gains and their top 10 days of movement. And so if you're out of the market on any of those 10 days, they actually draw down a little bit. Like your average return of Bitcoin is -5% if you miss those top 10 days. So as long as crypto exists, I wouldn't even have any allocation to stuff that sucks, like cash or gold or normal stocks. Screw all that stuff. It doesn't 20x. It'll never 20x. Who cares? Screw it. Don't even think about it. Just focus on the things that have the highest returns of any asset in the history of mankind. Bitcoin, Ethereum, other cryptocurrencies. Just focus on those. Don't worry about all that low margin crap.
Are you saying if you were a responsible investor with $100,000 to invest, you would take the entire $100,000 and put it into crypto?
Yes, 100%.
And you put it all into Ethereum? No,
I wouldn't, but you're restricting my answer set. So I like Ethereum a lot more than Bitcoin. And if a Bitcoin and Ethereum are the only two things I'm allowed to say, I choose Ethereum. I mean, it's an awesome. It works, right?
Gareth, what do you say? $100,000 to invest. It's your only investable income. You have a choice of whatever you want to do with it, but your starting point is today. Where do you put your money?
Do 20% gold, 30% short the U.S. equities markets, Nasdaq, tech stocks, all those. And then I would leave 50% on the sidelines to buy Bitcoin when it dips, or Ether when it dips down to target.
So you're saying 50% of it is in cash invested in Celsius in an 8% unlocked account. You're saying 30% take your money and speculate that the market is actually going to go down. If the market goes up, you're going to wipe out that 30% in no time, because that's how shorting naturally works.
Remember, 12 months. So, I mean, what's the market going to go against me in 12 months? 10%, 15%? I mean, you're not really wiping that out. I mean, yes, there's a risk, but what I'm saying is in 12 months, the S&P will be lower, NASDAQ will be lower than it currently is here. And then with the other portion, just patience, let Bitcoin flush out, let Ether flush out, and then just be ready to start to accumulate.
What's the matter with
It's down versus the dollar. You would have more money in dollars if you just held dollars. If you bought gold like Peter Schiff did, you're literally down money. It's not even to its high of 10 years ago. It's been down for a decade. Everyone else got rich and everything else possible. The only people that could lose were the people that bought gold.
So that
terrible goes down, and it goes down when the stock market goes down too.
Exactly. It's absolutely horrible. There's no upside, and it dumps when everything else dumps. It's absolute trash.
One of the things I've learned in 20 plus years of trading and investing is that sometimes having a safer asset, let's say gold performs 5%, 10% over that period, which is what I think it will. I think actually potential for $2,100 target by year end. But the key is, if you're going to lose 10 or 20%, I'd much rather make 5 or 10%. People always think they have to be 100% invested. That's ludicrous. Sometimes sitting in cash or sitting in a safe, something safer is fine. Let the opportunities come to you. You don't have to force trades.
When the market crashes, dollars actually get very valuable. So when the stock market crashed in 2009, the value of the US dollar against other currencies skyrocketed because everyone needed dollars. And so dollars is actually a great thing to be in if you think the market's going to crash. Gold is not. And then if you think the market's not going to crash, you think it's going to go up. Stocks are a great thing to be in. Crypto is a great thing to be in, but gold is not. So it's not good to have in a bull. It's not good to have in a bear. I can't think of any time when gold would be a good thing ever.
The golden rule, just to remind everybody, the golden rule is the one who has cash, not gold. The one who has cash is king. So
you can buy everything with cash. The only good thing you can buy with gold is cash.
Wow. So I'll just point this out. In March 2020, gold fell with the markets. It then recovered and made new all-time highs, going all the way up, went up about 25% in the course of 6 months.
But it went over its all-time high 10% from 10 years ago.
But that doesn't matter. I'm a short-term investor, right? So if there's a 12-month time horizon and I have to pick what I got to do, that's a short term. I'm not looking to marry gold for 100 million years when they're going to be mining asteroids, right? I mean, obviously at that point it's worthless, but I'm just talking short term.
So wait for the flash. It will go, gold will go down because people, like you said, the first thing people sell is actually not Bitcoin. They sell their gold before they sell their Bitcoin for cash, right? Because they need to cover the leverage and cover other stuff. So wait for it to flush, then you can buy gold. I agree with that.
All right, guys, listen, love you madly, but we've got to end the stream because otherwise we go over the hour. This is why we call the channel banter, because we specifically handpicked you people because we knew you had different views and we got our banter. So thank you very much, guys. Been a lot of fun. I mean, I've had fun. I'm sure that you guys have had fun. I hope that you guys have had fun.
It was fun, Rand. Thank you so much. And thank you, the rest of you guys. It was a lot of fun.
Great, guys. Thank you. Love you guys. Thank you. Have a great weekend. What did you think, guys? Was that fun? I mean, I had a lot of fun. Let me know what you guys thought in the comments. So yes, back next week. Sheldon's back next week. I'm back next week, Monday, 6 a.m. EST with a charting show, 10 a.m. EST. Next week, we're going to start on time. So when we say 10 a.m. EST, it's going to be 10 a.m. EST. I know we've been starting at 10:10 EST, but we're going to start at 10 a.m. EST. And when we say 6, it's going to be 6 EST. Much love to the best community in the world. Thank you for being the best community in the world. If you're still here, one more like, subscribe if you're not a subscriber. I will see you guys again on Monday. Until then, trade well, my friends.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged